Buckle up, folks! The US economy just roared back stronger than anyone expected, proving it's far from down for the count. But here's where it gets controversial. Is this surge a sign of true resilience, or just a fleeting high before the next dip? Let's dive into the details and unpack what this means for everyday Americans. In a surprising twist from Washington, the latest data reveals that the US economy expanded at a robust 3.8% annualized rate during the second quarter, marking a significant upward revision from earlier reports. Economists are buzzing about how this momentum likely carried into the third quarter, highlighting the remarkable staying power of the world's biggest economy. For beginners wondering what all this means, think of the economy like a massive engine powering our daily lives. And right now, it's revving up faster than anticipated. To break it down simply, gross domestic product, GDP, is essentially the total value of all goods and services produced within the country over a specific period. It's like a scorecard for economic health, measuring everything from factory output to your morning coffee run. According to the Commerce Department's final estimate released on Thursday, GDP climbed at that impressive 3.8% pace from April through June. This beats the 3.3% figure from the second estimate and blows past the initial 3% report, showing just how much stronger things were than first thought. What fueled this comeback? A drop in imports, meaning fewer goods coming in from abroad, combined with Americans continuing to spend like there's no tomorrow. Picture this. After a slowdown at the start of the year, when businesses stockpiled inventories to dodge potential price hikes from tariffs, consumers stepped in as the real heroes. They kept buying cars, gadgets, and vacations, injecting vital energy into the system. And this is the part most people miss. That early year contraction was partly blamed on importers preparing for President Donald Trump's tariffs, which effectively reduced GDP by subtracting from overall output. It's a classic example of how trade policies can ripple through the economy, sometimes in unexpected ways. Looking ahead, the Federal Reserve Bank of Atlanta predicts that GDP kept its strong pace into the third quarter, suggesting the good times might roll on. The government's preliminary third quarter GDP figure is set to drop next month, so stay tuned for more updates on this developing story. But let's stir the pot a bit. Some experts argue this growth is a testament to smart economic strategies and consumer confidence, while others whisper it's propped up by temporary factors like low interest rates or even a bit of luck. What do you think? Is the US economy truly bouncing back, or are we setting ourselves up for a bigger fall? Do tariffs help or hurt in the long run? Share your opinions in the comments. I'd love to hear your take.